Hi, everybody. This is Chris Kimble. Welcome to another edition of your Daily Five. Today's January the 25th. Kind of hard to believe the first month of the year is about gone. And so these are the things I want to talk about today. On the left, you're going to, why is the images lost and found in a teeter-totter? And by the end, I think you're going to know. But first off, I want to wish you a happy new year, and I wish you great health through the new year. And I want to talk about why did I suggest gold would be flat to down for years to come back in 2011. And so if gold happens to experience a flat decade, did stocks ever do the same thing as gold? Is that a rare event? And so what assets were up every year when stocks happen to be in a flat decade? We want to discuss that. One asset's lost decade is another one's spectacular decade, and that's the main theme for today. And we're going to discuss, the end of one trend is just the beginning of another. So let's get into it. So if you want to go to my blog and see if this is true, you can go to kimblechartingsolutions.com. But on September the 1st of 2011, some gold people didn't like me very much at the time. And I wrote this article and I said the Swiss franc is suggesting that gold would be flat to down for years to come. And this was after gold had been up 10 calendar years in a row. This has never happened in the history of gold. And so I used another indicator to help me with that. So the price when I wrote this article was $1,828 on 9/1 of 11. And like I said, I remember writing this and I was thrown under the bus because I said, every time the franc has done this, gold is traded flat to down for years to come. So let's turn the page forward to essentially Christmas of just a month ago. And so 11 years later, gold was trading at $1,828. And I'm not bringing this up because it's the exact same price. I'm just bringing it up, folks, that you can find these lost decades before they become a lost decade. And that's what we're starting to talk about. And again, we'll see at the end. One asset's lost decade is the beginning of another. So I'm really excited about this. When you look at gold today, this is as of this morning, it was trading at $1,927. So it's essentially $101 today, greater than it was 12 years ago. So one thing I wanted to talk about is in stocks and on the theme of lost decades is this. This is the Dow going back to 1900. And one thing you'll notice is there was a series of essentially flat tops. And this was a breakout from a 20-year sideways pattern. So when a lot of people get giddy over the roaring 20s, what was the roaring 20s, folks? It was really a 5-year rally above a 20-year resistance level. And as it skyrocketed, and then what happened? Well, it went up and then it collapsed 90%. And then where did it stop? Well, it actually hits the bottom of a 30-year loss channel. And so that was the start of a support point rally. And we've all heard, and I imagine many of you have, that charts have memories. Can you believe, folks, in 1932 that charts even had memories then of the prior 30 years? So I think there's more to this than most people really realize. So this happens to be the top of 1929. So here was a lost 25 years. If you were an unfortunate person to invest in 1929, it took you a quarter of a century to break even. Obviously it was best if you happened to buy it at the bottom of this 30-year channel. But then what happened after this breakout? Well, it rallied about 11 years from the early 50s to 1965. And then what, folks? We got another trading range again. And so after a lost 17 years, the Dow breaks out. And then what happens? Well, guess what, folks? Sir John Templeton happens to share with me back in 1998, he said, Chris, I think stocks are going to experience another flat decade. And that didn't go over very well with me because I've been preaching, I got in the business right here, talking about a blessing that you get in here, you don't even know where you really are, and then it rallies here, and then he says it's going to go flat. So that was very bothersome, but that's where I really got into technical analysis, and I'm so blessed that he made that mention. And so then it breaks out from 13 years of going sideways, and so then we've had essentially from 2011 to here, we've had another 11 or 12 years, up. So a question comes to my mind: do you know what conditions were commonly at play at the start of the prior lost decades for stocks. You know, he shared, Sir John did 7 or 8 things with me. And so one of the questions is, not only do you know those, but are they in play, happen to be again today? And could history be repeating itself? And so today is about, from a long-term view, history does tend to repeat itself. So when stocks experienced a lost decade from 2000 to 2011, and that's what Sir John would said, was there any assets that did well? Well, here's an asset that starts moving up. You can see it's up 80%, and then the next thing you know, the lost decade continues. So from 2000 to 2011, the S&P is down 19%, and lo and behold, gold's up almost 400% during that same time frame. So as Sir John was saying, a lost decade could take place. There was a great opportunity that was just starting to unfold. So not only did it take place in gold, this is the same time frame, 2000 to 2011. Silver did well too. It was actually up 420%. So maybe there's this teeter-totter effect that things go, back and forth easily. So I want to kind of talk about these teeter-totters, and as you can see that gold's a decade plus, gold's lost decade, some other asset did extremely well. What asset did well during gold's lost decade, folks? And here's your answer. And it was stocks. So now let's go back to 2011. When I went and shared to the world, I think gold will be flat to down for years to come. 11 years later, gold's up 5%. Doesn't even count in inflation. Silver's down 43%, and the S&P is up 230. So you're seeing a little bit of this teeter-totter effect that's taking place. And so one of the things that I want to point out is that this is from the prior slide, but there is a real teeter-totter effect. So again, here was 2000 to 11, stocks are down 20% and metals scream. Now let's just go from 2011 to current. Let's just fill in the blanks. So here's 2011 to current. Stocks are up 229%. Gold's up 5, silver's up 43. So you see this teeter-totter on the right. There's these long-term trends that are going back and forth for people. So I'm hiding the asset on top, but this is an asset we haven't talked about today. And this is one of the such a powerful things from StockCharts, everybody. And you could go in and look at rates of change, but try to do it. We're all getting caught up. Oh, what's the Fed going to do next week? And oh, what's going to happen in Ukraine and interest rates? I'm just thinking simply, folks, that you have these big teeter-totter effects. So whatever this asset is, you can see it rallied strongly up almost 55% in 10 years. And then it tends to teeter-totter. Here it's down 45% in 10 years. And then it rallies up 42% in 10 years. And then it falls 40% in 10 years. And now it's up about 38% in 10 years. Any idea what asset we're talking about? Well, it's really King dollar. And so here's a look at the US dollar on a monthly basis since I was a junior in high school in 1974. And the point being is that the dollar, after long periods of strength, 10 years, 10 or 11 years, tends to do the teeter-totter effect, after it's down 30, 40% in any 10-year time period. And so not only is the dollar up 38% in the last 10 years, maybe it hit the top of this falling channel. And we're going to continue to build on this in a series with StockCharts and Daily 5. So we're going to come back and look at, are you aware that right here, one of the largest bearish reversals in the history of the US dollar took place right there after 10 years and up 38%? So folks, really, this whole charts that we've been going through are highly influenced by King dollar and its long-term trends. And so as the dollar, had fallen 40% in 10 years, right here is where I suggested that gold would be flat to down for 10 years. Was that really smart or a great crystal ball on my part? When you start looking at these things, the odds were starting to get in Chris's favor that he was accurate back then. So as we finish this up, I just want to talk about that. As the 60-40 portfolio, we all know how it did last year. But folks, that was last year. It doesn't matter, it was a calendar year. That end in so many things is just the beginning. And that's what today is about. The end of one long-term trend is the beginning of another. And talking about being blessed, that you think about Sir John Templeton bought into the Nikkei at just a few thousand on the index in 1965, put 65% of his portfolio in Japan, and skyrocketed up until 1988, and he sold out. And people thought, oh, the old guy's lost his touch, but he shared with me, I think we're going to have another lost decade. And so now here we are. So just call that 1990 when Japan peaked. This is 2023, 32 years later, and that index is still down 20-some% from where it was. So I want to just leave with this point, everybody. Opportunity comes in many different ways, but if you're not aware of this, I believe this is my 43rd year in the business, that we are on one of the largest groundbreaking new beginnings that I have seen in all of my decades in this business. And I can say, you might hear it in my voice, I've never been more excited, folks. Even though I'm 65 years old, this is exciting stuff if you're aware of these things. So we're going to continue to talk about what we started right here in January in future daily fives. We're sharing the answers to these things. There was a currency that I said in the very first slide. This currency is suggesting gold will be flat for down for years to come. And that currency was the Swiss franc. So we're going to discuss its messages in future daily fives. You'd like to know the answers immediately to some of these things and how you play these new trends and what might they be. We're offering a discount to StockCharts members. You can go to kimblechartingsolutions.com/StockCharts and get roughly a 30% discount. So thank you for your time today. Greatly appreciate it. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.